time around. Now, that's good news for indebted consumers paying interest on their loans, but without higher interest rates, South Africa could struggle to attract investment this year, and the rand did in fact weaken after that decision. Well, it's often been said that the Reserve Bank is between a rock and a hard place. On one hand, there's high inflation, and higher interest rates can help by curbing the amount that people can spend and therefore calm the rate at which prices rise. On the other hand, there is low growth, and high interest rates can make that problem even worse. The Reserve Bank has revised South Africa's growth forecast down from 0.8% this year to 0.6%.
The Reserve Bank continues to face the dilemma of upside risks to the inflation forecast and a worsening growth outlook. The economy is now expected to grow at 0.6% this year. Inflation is expected to accelerate towards the end of the year, but stabilize over the medium term. The drought and the weak rand are adding to the high inflation.
Food prices remain a significant risk to the inflation outlook in the face of persistent drought and exchange rate weakness. These pressures are evident in both consumer price and producer price indices. Although for some time the MPC has been expecting an acceleration in food price inflation, the recent increases have surprised on the upside, and more aggressive food price increases are now forecast for the near term.
With inflation above the Reserve Bank's target, interest rates will likely go up before the end of the year. Business says high interest rate environment will impact negatively on business and job creation.
Small businesses, most of them, survive through going out and borrowing loans from banks in the majority and from some of the state institutions. So the increase of interest rate is really going to force them to retrench staff or to close down businesses.
Labour says the decision by the Reserve Bank to leave interest rates unchanged is the right one in the current economic circumstances.
The interest rates, when they are put too high, as ours are already too high, spells disaster to the unemployed, to small business, to anyone who is borrowing money, either to own a home or to start up a new business. We shouldn't be preoccupied with keeping inflation as low as 3 to 6%.
Economists say low business confidence levels, coupled with the high interest rate environment, will impact negatively on business.
For many of them, their funding costs have already increased since last year, given all of these credit ratings concerns and the potential of a credit rating downgrade. We're in any case relatively bearish about short-term fixed investment outlook. I think the only real driver of private sector fixed investment at this stage is the renewable energy program. Other than that, there is probably just too much uncertainty both about politics, policy, and the general economic outlook to really be expanding capacity.
We are still in an environment where interest rates by historic standards aren't too high. Clearly, if we see an interest rate cycle that's similar to the type of interest rate cycles that we've seen previously, where interest rates increased from trough to peak by more than 500 basis points, then I think you'd see massive defaults and businesses really struggling. But I think as things are at the moment, there will be some people that are beginning to squeal, but I don't think it's something that's going to be broad-based as yet.
It's expected the Reserve Bank will hike interest rates by about 0.5% by the end of the year. Gloria Sefako Musi, SABC News, Johannesburg.